Hey everyone. Starting to see some folks trickle in. We'll just keep giving it a few minutes, but thank you to people for joining us on their lunch hour and on what's a very nice day here in Toronto. So really thankful for folks to join us here to learn about the ways AI can help advisors benefit in their practice. We've got Josh Farruggio here. Just going to keep giving it a few more minutes here as people trickle in. But yeah, thanks again. So seeing a good number of people. So I'll just start introducing here. Excuse me. Thanks for joining us. I'm Fraser Abbey here from the marketing department at Boosted AI. I've got Josh Farruggio here. Josh is the director of sales at Boosted. And, given the hype that we're seeing around AI right now, especially with, apps like ChatGPT, we have been hearing a lot from our prospects and our clients that their own clients are asking them, what are you doing with AI today? And people are having to have an answer for that. So between hearing about all sorts of the ways that folks can use AI, but also maybe some of the mythical ways that folks are hearing about ChatGPT, it's passing GREs, it's passing even Somalia tests. We wanted to kind of show some of the real life applicable use cases that folks can use to get the most value out of AI. So I will hand it over to Josh to take over here, but thanks again, everybody, for joining us today.
Thank you,
Take it away.
Fraser, for the introduction, and obviously thanks everyone for coming today. We're thrilled to have you join our webinar and address how investment advisors can utilize artificial intelligence and understand where it best fits within their practice. So we'll take a look at our agenda for this afternoon. We're first going to take a brief understanding of the global impact on artificial intelligence. Next, we'll take a step back and really look at the basic lens of artificial intelligence and break it down further in that scope. And finally, we'll spend the rest of our time running through our platform to demonstrate how advisors are actually currently using Boosted AI. And then with a Q&A wrap-up session very briefly at the end. So we work with institutions and investment advisors to help you pick stocks and utilize artificial intelligence. We started in 2017 with offices in New York and Toronto, and our team really comprises of dedicated machine learning experts, data scientists, engineers, along with finance professionals and marketing professionals like Fraser and myself. We serve clients all over the globe. Our business really originated in the institutional space, dedicated to managers who are looking to build an infrastructure where they can take advantage of machine learning techniques and improve systematic investing. So in January of this year, we actually started serving the investment advisor marketplace with a strong need for wealth managers to adopt a similar process. But at the end of the day, we help investment advisors and portfolio managers pick stocks while using artificial intelligence. Since November, AI has become a buzzword, as Fraser mentioned, with the emergence of ChatGPT. But it's not just a buzzword; it's a lot more than that. And McKinsey recently published a report on the future of artificial intelligence. One of the charts that caught my eye, or my attention really, was the total economic potential of artificial intelligence. And you can see that on the far right side of this screen, a $26 trillion impact on the global economy. When we look at that on a relative scale, just to put it into a big picture here, that's almost a quarter of global GDP affected. So this speaks volumes to how artificial intelligence is being incorporated into the economy. And investment advisors should turn their minds really to the use of AI and how it might give them an advantage to benefit their clients. Let's take a step back though and understand what AI means and break down some barriers to truly understand what we're talking about. And in its simplest form, we are developing and understanding patterns to make predictions. So you're probably wondering why I have a picture of a bike here. And I'm sure a lot of people on this call remember the time that they learned how to ride a bike. Along with that experience came a specific set of instructions from your parents. And I'm sure we could brainstorm more here, but don't go on the road, wear a helmet, stay on the sidewalk, don't go too fast, maybe walk your bike when you cross the street. And as we ride our bike, things happen inside and outside of our control. Maybe we went too fast, causing you to fall over and scrape your knee, or moving forward, you learn not to do that again. And as you learn these lessons, you have a good understanding of how your future rides might go. You can predict how the tire might go over a rock or a branch, or how you take that sharp turn. And I think you understand where I'm going here. AI can perform human-like tasks to learn patterns and predict what might happen in different situations. Now that we have a basic understanding of artificial intelligence, I think a great starting point is taking a look at the organizational structure of an advisory business. I'm sure we're all aware that most structures look something along the lines of this slide here. Some teams are larger than others, maybe have a few associate advisors, while some only have one associate, or even some that operate as a lone ranger. And I can definitely feel that when I'm on the road sometimes myself. But the reason why I put this visual up is because we believe that our platform can be used by each member of your team on a daily basis. We don't see ourselves as a replacement to anyone on your team, including yourselves. Rather, we think of ourselves as a complementary team member to your current structure. So as we go throughout the presentation and take a deeper dive into the platform, I want you to keep this general image in the back of your mind. We work really with clients all over the place, and I think we've narrowed down the most effective use of our platform in 3 ways. And we do that by really augmenting your investment process. Number 1 is monitoring. So monitoring existing or potential investments to really utilize and get different viewpoints from our comprehensive watch list, where you will get real-time insights across multiple strategies. Number 2 would be idea generation. Putting things on your radar that you would have never thought of, surfacing new stock ideas and insights. And number 3, as we uncover those new names or even look at our existing names, taking an investment deep dive, understanding it through an unbiased view through AI insights. But what sets us apart from everybody else? I think we get this question a lot, especially us sales folks. But that has to be our finance-specific algorithm, Battle Royale noise reduction. And what we do here is we emulate the human investing process. We compare each set of securities in the universe against each other. It's uncorrelated to traditional techniques that others may use. And really it's explainable. There's less volatility in the selections that we have. But the number one thing is that we adapt to current market conditions. When the central banks tighten monetary policy, or when we've experienced drawdowns like 2008 or March 2020, we're able to tell the machine a set of variables to learn on that aligns with an investment goal or style, and then conduct a bottom-up analysis of every security. And we then compare every security against each other and break our universe into quantiles. So our top 20% being our best ideas, bottom 20% being our worst ideas, or maybe stocks to avoid there. And really, to finish this process, we take a holistic view, looking at market conditions, AI accuracy, and factor timing to really see if stocks are actionable at that point in time. So with that, you're probably wondering, how does this help my practice? And everybody loves to jump into the platform. So that's exactly what we're going to do right now. And, I highlighted before, essentially a few ways in which we provide value to our clients. And that's obviously through our watch list monitoring, which we'll get into, our idea generation, which we'll again get into in the latter half of the demonstration here, and then taking a deeper dive into one of those names. But a great place to start has to be our strategy library. Our library comprises of about 100 different models, and we've really understood variable sets that work really well on the institutional side, bringing that same technology to investment advisors. So with our 100 different strategies, we have multiple universes. We have global data. Our providers in FactSet, S&P covering our fundamental and technical data, along with macro data from the Fed. But we cover about 55,000 plus companies. So different universes, different styles, and even some that are sector specific, if you wanted to look at it through that lens of idea generation. Our library is twofold in the sense that we provide weekly ideas, higher turnover in nature, but you're provided actionable picks every Monday that you can run with. On the flip side, we have direct trading models. These are core model portfolios that are more concentrated, lower turnover, and really the difference between the two are none. We have the same methodology in both. Differences in terms of parameters and trading, but the methodology holds true throughout. So I'm going to open up our North American large cap because I think this is a really good place to start. Number one, you will receive a fact sheet in which you can now white label using your own branding, whether it's specific to your investment dealer or your broker dealer, or maybe you have an advisory team logo. From there, you can actually change the name and use this as a piece to help you build business. When you're out on the road prospecting, talk about the AI insights that you're utilizing within your day-to-day, even your associates, or even as you file away certain things with your administrator, they're able to take this back in one-page format. I'll jump into our view details section of the strategy because this is where we're going to see the engine of boosted AI. And I think a very good place to start is our explainability tab and our feature word cloud. The reason being, we have a very sophisticated investing committee that has roots in the institutional game. We have told the machine in this specific mandate to learn on 43 different variables. And each strategy is going to have a complete different set. If we're going more momentum-based, maybe we have a tilt towards more technical indicators, whatever it may be. So here we're looking at more of a blend style. We're looking at fundamental drivers, technical, and macro. But we get a blend of everything from a fundamental side as well. When I expand all, you're going to be able to see the specific variables that we told the machine to learn on. And this is concrete and fixed to our philosophy here. Capital efficiency, return on assets. There's a bunch of other things that are going into this machine. That holds true. We don't swap anything out. That is aligned with our investment philosophy. On the other side of the scale here, on the right-hand side of the page, we'll see importance weights. And this will change as we go through different market periods. So pay attention to the word cloud. As I shift from today to, let's say, when the Fed was increasing rates, or when we went through COVID as an example, the machine is smart enough to optimize the variables that we've told the machine to learn on and give an unbiased view of how the market is moving. And we're really looking backward on an 8-year validation window to understand the patterns that we've learned on and apply that to today. In addition to that, I want to show you our tear sheet. The tear sheet is going to be able to show you all the strategy stats from annualized returns relative to the benchmark, annual turnover. But what I like to show are the return quantiles. So in addition to, let's say, following this specific strategy and understanding when the trades come through and employing that within our day-to-day, we can also look at this through the lens of idea generation. So as we look at our cumulative returns, we're breaking down our best ideas, remember the top 20%, which is our dark green line here, and our worst ideas, the bottom red, the bottom 20%. Those 5-star stocks on this specific strategy, annualizing 19% or close to 19% since inception. And on the flip side, negative 3.5% since inception. So from a signal generation standpoint, and we'll see this when we plug in some of our names into our watch list, we're able to use this as a quant overlay or a signal overlay to your existing portfolio. And a lot of advisors are using it in that lens. Maybe they have a very strict process internally, lower turnover, but getting different opinions from the machine and getting different signals on a day-to-day or more frequent basis is something that they really find value in. In addition to that, we're not just back testing and putting these models live. We're not just getting lucky here. We're able to pinpoint and show you our hit rate and excess return tables. So that top bucket, the top 20% on a 1-year basis, has a 57% probability of creating positive excess return. And when we do hit, typically around or above 7% excess return. That actually holds true to the worst ideas as well, with a much lower hit rate and negative excess return. So really neat to see that come to play and show or also give you confidence in the strength of our signals. We can also see holdings. We can see trades on the particular strategy, but my favorite part has to be rankings. And the reason being, we have helped so many advisors with KYP suitability requirements. What we do is we rank the entire universe. We're able to pinpoint why the machine likes a company on a variable lens, the top 5 positive and negative drivers for the entire universe. You like a company, you can search it here, you can check out specific sectors, subsectors, but best of all, and this is going to save all your associates and your administrators a ton of time, whenever you conduct a trade, we're able to give you a 1-page stock summary. Print a PDF, off you go, and file it away in your report. There's a lot more that I can get into here, but let's see how that funnels through to the rest of the platform. Here, we're looking at our watch list. So we've looked at a strategy. We understand how it works. We understand that we have different universes and styles, and that's exactly where we employ it in our watch list function. We can create multiple watch lists, add as many securities as we like, and in column view, we could actually add different styles. Maybe we want to look at a value, momentum, and growth lens to get a more holistic approach. Maybe we want to have a all Canada wide versus a Canadian model that has market cap above 500 mil in market cap as an example. So we're able to get different viewpoints, and under each strategy, we're able to see on a scale of 0 to 5, 5 being the highest, 0 being the lowest, the recommendation or the rating of the company, and then the recommendation engine, what the machine believes, whether it's a strong buy all the way to a strong sell. My favorite thing is that we get a consensus recommendation. So we're able to take an aggregate score across the board of all the strategies that we see here. I'll click on CP as an example, and this is going to take us to our investment deep dive. So we saw the watch list, whether we're plugging in a head office recommended list or a focus list from the top of the house, or our own existing portfolio and getting those tactical signals or overlay of signals like we discussed, we can now start the process as to how we can tell a story. And the machine is going to help us give an unbiased view of that lens. Number one, we're going to see the recommendation of the machine. So in this case, a strong buy. We're going to see that star rating on a scale of 5, predicted excess return relative to the benchmark. So right now I'm looking at CP through the lens of that Canadian strategic strategy. And we think it's going to outperform the TSX by 7.23% in the next year. It's risk reward, so low to high here. And really cool, we're showing our natural language processing here, where we're scraping 10Qs, 10Ks, and other filings to give you quality or qualitative speaking points that you can use to help speed up those research meetings internally. You know, as you meet with your associates and your administrators or your other senior members on your team and discuss, you know, what should be on your radar, we're going to give you additional speaking points to those names or even existing names that you have. So from a pros and cons perspective, really, really neat. In addition to that, we're going to see the machine opinion. So understanding the factor score, but also market conditions and accuracy. Is this a trend continuation buy? Is this going to be a trend reversal short? So really nice to see from a quantitative view, the machine opinion on this particular company. I like the historical price performance chart for many reasons, and that's obviously seeing the timing of when our analyst or machine, I guess you can say, rated it from a strong sell to a strong buy. So as we go through different time periods, we can see the recommendation, we can see the rating, and we can see the price or performance delta. On the right-hand side, this is extremely powerful in many, many ways, and a lot of advisors are using it for, I'd say, 4 main reasons. The first one being idea generation. So what we're seeing here is CP. We're analyzing this particular company, but our machine is now looking at AI selected comparables. We're looking at factor similarity, machine factor similarity, price similarity to really get the overall picture. And we can determine whether companies are, 80% similar to CP. So from an idea generation perspective, it's great to see similar names. Maybe we want to reduce concentration risk. So that would be a second way to kind of go about doing that. We can do a 50-50 split in terms of the allocation percentage. Or maybe you have a client that's an insider on a particular name and you want to use a comparable stock to replace their portfolio. But my favorite has to be tax loss harvesting. I know at that time of year, in the event that we would sell CP, we would probably replace the monies towards a broad-based index or ETF to maintain that exposure. We don't have to do that anymore. What we can do is look for companies that have, again, a very close overall similarity and maintain that same sector exposure, or maybe pivot to a different sector to help be tactical in our approach there. What we'll notice are the fundamental technical and macro drivers. So if you recall, we fed the machine various variables based off the philosophy of each mandate. And we're showing a glass box approach in the sense that we're going to see the exposure of these variables relative to the universe over different time periods, whether we're looking at 1 week all the way to 1 year, and the machine sentiment on a scale of A to F. So what the machine actually believes, its opinion. We can do that on a technical and macro perspective, and even drill down further onto specific variables if you really wanted to. On the right-hand side, again, this completes the entire story, looking at performance attribution, understanding either the 1 week trailing return all the way to 1 year, and determining whether CP's performance is attributed idiosyncratic or stock-specific factors, or whether it benefited from its market exposure, whether it was positive, neutral, or negative. We also break it down into risk factors, understanding if it's been tilted towards, let's say, more growth or value or momentum. And then finally, our sector rankings. So we can actually determine how the company is placed within the universe, the sector, and the sub-industry group, and understanding the sector rating within itself. Finally, our ideas page. And here, again, this is going to help advisors in their research meetings. I think it's going to be very beneficial, whether you meet on, a Monday or end of the week, depending on how often you set aside time, whether it's bi-weekly, monthly, every week. You're able to see over different time horizons the best ideas, the home run hitters. What are our strong buys and what are the strong sells. The strong buys in particular, again, employing that natural language processing, giving you the reasoning as to why the machine is recommending it. So getting a quant view, but also some qualitative speaking points to add to it. From this lens, sorry, it looks like I clicked on a name by mistake. But from this lens, we're able to see, the drivers in particular, the sentiment of the machine, again, our predicted excess return of whether we think it's going to beat the benchmark by X%, and then also determining whether we should be looking at the universe from a macro view, sector rankings, understanding over the next year, consumer staples, utilities, and healthcare for this S&P 500 tactical model is where we should be. Those are the top 3 sectors. But over the last week, our delta horizon there, we've seen energy move up 1 position. So really good to get those top-down view insights. And then we do something similar on a stock level where we're tracking, again, over different time periods, all the way from 1 week to 1 month, or 1 year, sorry, positive and negative moves on a stock level as we move from the bottom quantile to the top, or the top quantile to the bottom. So really, we give you the power to do watch list monitoring, investment deep dive, and easily in-your-face idea generation. And one of the new features that we implemented as well is our paper trading feature, in which we can create multiple portfolios to track performance moving forward, inputting the number of shares and cost basis. I'll come back to our PowerPoint here very quickly. And I threw a lot of information at you guys, and I know that we've gone through the platform. I'm sure you can start to make some parallels and understand how that fits within your business. But that really concludes everything. So I'll pass it over to Fraser for the Q&A portion, but feel free to take out your smartphone, hover over the barcode here, and it's going to take you to our book a demo page on our website, where we'll connect you with one of our business development representatives and ultimately one of our account managers. So thank you, and over to you, Fraser.
Yeah, thanks so much, Josh. I think that was great. I loved your bike metaphor. I think that makes so much sense on how folks can kind of conceptualize the benefits of AI in a way that makes sense to them. One of the ones I like to think about is as to the benefits of kind of like, you could navigate to do a cross-country road trip via a paper map, but you could also use, Waze or Google Maps or whatever. And, which one would you prefer? Which one is probably going to lead to less fights? I think, we all know the answer there. So I think that if I was to summarize your points, I think a lot of it is about saving time. It sounds like, the KYP stuff, those printouts that people can use to show their clients and kind of like deliver that value, helping them find stocks, helping them with their research and idea generation, and then even getting macro views and both bottom up and top down views. I think all are about using the technology that's available in the world to save them time. So we're running almost at 12:30, so I won't take too long, but there was a few questions I thought would be good to catch up on here. I think one of them that probably is maybe on a few other people's minds here is, what technical skills or knowledge do we need to use to be able to use AI for asset management?
Yeah, very good question. I think we get that all the time, where it seems daunting. But from our perspective, and as you saw through the platform, no programming experience required whatsoever. We make it extremely easy, where click and point usability, but also we have a very thorough onboarding process. On the institutional side of our business, you'll have access to our customer success team. And then even on the investment advisor side, our account managers have a very thorough onboarding and training sessions moving along that path throughout your boosted journey. So we're with you all along the way.
Great. And we'll close it with this last question, but I think this is another one that is probably on a lot of folks' minds, in every industry. But the question is AI the beginning of the end for financial advisors, or do you think there's always going to be room for face-to-face customized advice?
Yeah, it's funny. We get that question a lot as well, where
I mean, me too in marketing, right? Yeah, every industry.
Yeah, they're scared of something to replace them. And as we mentioned throughout this presentation, we're not intending to do that whatsoever. We're just a team member helping you along the way. You guys are the experts at planning, talking to your clients, understanding the human emotion component. We give you the unbiased view of your portfolio and help you streamline some of those processes that you have. So yeah, by any means, we're not replacing advice. I think that's obviously cemented in here to stay. And we look at it as partnering with you guys to help you along the way.
Well, thanks so much for walking us through, Josh. Again, yeah, if anybody would like to hear more, there's that QR code on the screen, and you can visit us at boosted.ai as well. But thank you all so much for joining us on this Tuesday afternoon, and looking forward to welcoming you back to our next webinar. Thank you very much and have a great day.
Thank
Bye,
you.
everybody.